What's up you guys, Zoe here from OneGlassTrader.com, and in this video I'll be sharing with you a simple trend trading strategy utilizing my OGT Trend Dashboard indicator. Now, for those of you who have not downloaded the OGT Trend Dashboard indicator, I urgently recommend that you download this indicator. It's absolutely free, links in the description, and I'm not going to go into the mechanics of the indicator in this video. I'll link in the top right corner so you guys can check that one out. But ultimately what it does, it uses a combination of three moving averages, a slow, medium and fast moving average, of which then will dictate whether a time frame of a particular currency pair is either trending in an uptrend or a downtrend or ranging. And the reason why I love this indicator, it gives you a clear one view snapshot of as many currency pairs as you would like, really, in terms of you can quickly see if there's a massive brush of red, a massive brush of green, to see whether a particular pair is either trending or well, trending in an uptrend or a downtrend across multiple time frames. Now, the way that this strategy works and how you can utilize that dashboard is that you ultimately look for a sea of red or a sea of green for a particular um, currency pair, and then you use your favorite entry signal, and I'll go through a couple in this video to take the trade, and obviously look for a, like I always like to do, a 1-to-1 or a 1-to-1 move stop to break even, trying to get a bit of a runner and take half off the table and let it ride. So this for me is this is the way I like to trade. I like to not be in the trade for such a long time. But again, that risk to reward bit is up to you and how you guys play it. The aim of this video is to give you high probability entry setups going with the long-term trend. So let me walk you through what the settings or the MA settings are for the trend dashboard, and then I'll show you um, two indicators of that I like to use in trending scenarios for taking entry signals. So the first one is, let's have a look at the trend dashboard. So the trend dashboard, again, I've set all the time frames on, and I know it does take a bit of power of your machine. So again, this is something just to really get a view of which pairs to look at, and then you can turn the indicator off if you so wish to. And the MAs that I use for this particular method is the 10 period as the fast, 20 period as the medium, and the 50 period as the slow, and the rest is just all how I like to set up the chart in terms of where it's placed, etc., etc. So that brings us into this situation over here, which you can see. And like I said, the thing you really want to be looking for is you want to be looking for a sea of red or a sea of green. And hopefully you guys can see this now, that, and it might give it away that I'm on the pound dollar 15-minute chart, is the what is the pairing question that I want to go through today. And it's quite good because this happened live today in terms of the signals that came up, and it gives you a relevant real-time kind of example. Is the pound dollar. So you can see that the pound dollar is pretty much red, and you've just seen the 1-minute chart just go into red as well. So we can clearly state that the pound dollar is in a long-term downtrend, and for me being in the UK, the pound has been tanking in its pair since Brexit and all that kind of good stuff, and it kind of makes sense that that the pound is in a long-term downtrend. So in this current situation live, as you can see now in this video, is that every single time frame bar the daily is now in a downtrend according to the three moving averages. And the indicator doesn't put the three moving averages on the chart, and I've just put it on here for illustration purposes. You don't need it because obviously the kind of dashboard explains that to you. Is that you can see that price is below the moving averages, and the order is 10, 20 and 50 on there. So when they're in that order, it then dictates what color the blocks or the time frames are. And gray basically means that they are not not aligning in that particular order. So now that we've got this scenario, and if I look at how today's price action went on, and I like to do this on a 15-minute chart, it's not too slow, it's not too fast, and I'm really going to take it. And again, you can see from the two lines of this is today's price action, is I'll probably take it from this area here, because this is now when all three are below price and are in the direction from there. So really between here and here and live now is really there. This is all chop and stuff like that, whereas all the higher time frames, H1 and above, may have been red, and I might have been looking for an opportunity at this point. But really I like to do it at least when the current time frame I'm trading, and all the ones above it, I'm not too fussed the ones below it, because they're just going to chop up and down as price moves. But the ones to the right are in the direction, in this case red, of downtrend of what I'm looking for. So like I said, is the kind of two kind of entry signals. Again, there's so many of them you can use. When it comes to trend trading, it's very straightforward in terms of entry signals. It's just, unfortunately, it's just trying to time that thing of when these when a market is trending, and I think this trend dashboard does that really well. And again, I've tried to take the guesswork out of it, and really it's got to a point where you can clearly see that we have a downtrend on the pound dollar. So the entry signals for me are going to be either the most basic form is the stochastics. So stochastics again is an oscillator similar to an RSI, ranges between 0 and 100, and in this case I like to use 85-25 as the kind of main barriers for the stochastics. So when price is at 85, it is considered to be oversold, oversold, yeah. And then if it's overbought, sorry, and then if it's below 25, it's considered to be oversold. So in this example is when the stochastic enters the 85 range, I'll be looking to sell a currency pair, and when it enters the 25 range or below 25, I look to buy the pair. So in this case, we're looking for a downtrend. And so we're looking for when price enters the 85 mark. So in this example here, you can see that there's two opportunities that have happened. And again, I like the stochastics because the in a trending market, the amount of drawdown is pretty much next to zero or very minimal. So in this example over here, you can see that it enters there on this bar over here. We enter the 80 mark, so we'll put a buy order, a sell order in here, and you can see that we had about, worst case when you include spread and stuff, 6-7 pips, and it went all the way down for 100 pips. I'm not saying that you're going to do that type of reward to risk, but whether you're doing it to this low over here, let's say worst case you went up to here and had a 20-point stop, or above these highs here and had a 10-point stop, getting here you've got at least a 3-to-1 there. So again, you had a good risk to reward ratio in that particular example, and again you are going with the long-term trend here. So again, that's one example there of what you can use. And then the other entry signal, which wasn't too long ago really, from when I'm recording it about an hour ago, is when it gets in there. So it gets in around here, and again it gets to a high of like 10 pips, 10-15 pips, let's say. Even if you wouldn't even know where you would put your stop, really, to be honest, in this particular one, even if you put it over here. And we are 12 points in profit at the moment, depending on where you put your stop loss. So again, I don't know how the rest of this day is going to play out, but it's not long left to the weekend, till the market closes. But again, those are just two examples of where you can utilize the stochastics, and that's the simplest form. If you're looking for an entry signal in a trending market, the stochastic, sorry, is one of the best indicators for that. I might just do a sole video on the stochastics and trend trading, because I do think it's very powerful. The next one is I would like to talk around is my Kuhmo Cloud Breakout Indicator of what I discussed in my last video. Again, I won't go into the main details of it in this video. I'll link to that in the top right corner so you guys can check that one out. But effectively, what it does is it looks at higher time frames again of where it's below the Kuhmo cloud or above the Kuhmo cloud. So for those of you who don't know, so the Ichimoku indicator, one of the elements is the Kuhmo cloud, and basically when price is above the cloud, you're considered to be trending. When you're below the cloud, you're in an uptrend, and when you're below the cloud, you are considered to be downtrending. So what this indicator does, it looks for when price breaks through the cloud up or down, and then looks at the next higher time frames. In this case, I've set it to 2. My favorite is 2. So it is looking at the 30-minute and the 1 hour. And if price is below the cloud on those 2 time frames, and every time price breaks out of the cloud on the current time frame, the 15-minute, it gives you a signal. So what I'll do is very quickly just put on the indicator so you can see what I'm kind of talking about here. You cannot see that because if I can't see it, there's no chance on a video you guys are going to see it. So bear with me. Okay, here you go. So you can see here, and it's distinguished by these arrows, and these arrows are basically saying that price has broken out of the cloud once, twice, and 3 times on that red bar there, and price is already below the cloud on the 30-minute and the 1 hour, so 2 time frames higher. Again, you can set that lower or higher based on your personal preference. Like I said, I prefer to have 2. And again, this was yesterday's price action. You had 2 signals here before the stochastic indicator gave you a signal to potentially go short. So roughly, if we say that you get in short around there, again you would have your stop loss either above the highs, above the cloud even, or above these highs here. And again, as you can see, you've got a nice move down. So that to me, again, I do love this indicator. It's basically a breakout pullback indicator using multiple time frames. So you can just imagine the layers you've got here. You've got 3 moving averages, which effectively what the trend dashboard is, that is in the same direction on multiple time frames. You're now using another indicator, effectively the Ichimoku indicator, using the way that that's calculated the cloud in terms of the 2 time frames higher, the 30-minute and the 1 hour below the cloud, so it's inside a downtrend. So using moving averages, you're using the Ichimoku and potentially using stochastics as well there to distinguish a particular move to the downside. And this is why I think it's such a beautiful kind of overall package trend trading approach here. So I really hope that you found this useful. Again, all the indicators that I offer are absolutely free. Links in the description to just register and just go download all the indicators. I've got a new indicator coming out in next week's video, so check that one out. That one's going to be absolutely great. And again, just give me your comments and your feedback, and subscribe, hit that notification bell, and again, just check out my other videos that are on screen now, and I shall see you guys in a second.